Hello, and a very good morning to everyone out there. Welcome to the ASEAN FinTech Forum, a virtual conference presented by Tech in Asia in collaboration with Amazon Web Services. My name is Winston, and I'll be your host for today. So we've brought together FinTech thought leaders and technical experts from across the region. Together, we've curated some of the most pressing and important topics across business and tech that I bet will greatly benefit your FinTech business. I'm very excited. I hope you are too. And to listen to all that everyone has to say. So let's get started. For the first session, we have a panel discussion. Melissa Guzzi, co-founder and managing partner at Arbor Ventures, and Sam Allen, CEO of Hyphen Group, will be speaking. They'll be discussing the most innovative trends that are driving forward ASEAN's explosive fintech industry, from new tech to business models, partnerships, investors, a whole bunch of topics. Our panel of experts will share up-and-coming trends and forces that they're keeping an eye on. Last but not least, this session will be moderated by Digvijoy Shukla, also known as Diggy. He is the startup ecosystem lead for ASEAN at AWS. I'll pass the mic to you now, Diggy.
Hi, good morning. A very warm welcome to our FinTech Forum hosted by AWS and Tech in Asia. We are doing the first panel over here, which is the State of the Union. Just to introduce myself, I'm Diggy. I'm part of the startup BD team covering Southeast Asia. I've been with AWS for the last 6.5 years. Been an entrepreneur myself previously, and it's really my privilege and honor to sort of have two very phenomenal panelists. So Melissa is Guzzi, who is the co-founder and managing partner of Arbor Ventures, and of course, Sam Allen, who is the CEO of Hyphen Group. So let's kick off the session. Melissa and Sam, to kick off, Melissa, if I may request you to introduce yourself to our audience here, your background, and also talk a little bit about the your fund's thesis.
Thank you very much, and really appreciate AWS and Tech in Asia inviting me to join this panel. At Arbor, we like to say we do one thing and we do that well. We invest in financial services globally. Our headquarters is Singapore, but we do invest around the world. So it's Asia, United States, and in the Middle East, including Israel. We'll be managing close to $1 billion this year. And 80% of that is early stage investments, 20% late stage. I think for us, it's really about depth of knowledge in certain sectors and really being able to work very closely with entrepreneurs to grow their companies over a period of time and help them really recognize a dream by making strategic introductions, thinking about product market fit, as well as helping them recruit teams to be able to execute. So that's a little bit about Arbor.
Awesome. Thanks, Melissa. Sam, over to you.
Yeah, thanks very much, Diggy. And again, thanks to AWS and Tech in Asia. Really appreciate the chance to be here and share what we're doing and seeing in the industry. So my name is Sam Allen. I'm the CEO of Hyphen Group, based here in Hong Kong. Hyphen Group is a portfolio of digital brands that are all aligned around a shared mission to empower and connect people to a healthier financial future. We do that by educating our users, by empowering them to make better decisions, and then by helping them realize those decisions through deep integrations with our financial institution partners. We operate 8 brands across the region. To give you some examples, in Singapore, we operate Seedly, which is the largest personal finance community in Singapore, SingSaver, which is the largest personal finance comparison business in Singapore, and then Ecos Connect, which is our SaaS platform that we launched last year. Across the region, we operate across 6 markets. So we're in Hong Kong, Taiwan, Singapore, the Philippines, Malaysia, and Thailand. We have more than 10 million users that we engage with each month across our portfolio of brands. We partner with more than 200 financial institutions. As a team, we're 400 strong, and we're fortunate to be backed by a terrific set of investors, including IFC, which is part of the World Bank, Goldman Sachs, Experian, and Pacific Century Group, amongst others. We've been building Hyphen for about 6 years now. Hong Kong has been home for me for about 15 years. I spent the prior decade of my life with KKR in the investment world, helping build and run businesses in their portfolio, first in Silicon Valley, but then mostly here around Asia. And at this point, Hong Kong is home for me.
Awesome. Thanks, Sam. Wow. What a great company you're building. Okay, so let me get started in the discussion since we're talking about the State of the Union. So, Melissa, I'm going to come to you first. I think 2 points. So, one is, obviously we are in the new normal. How has sort of that affected the funding trends in fintech specifically? And the second part of the question, since you mentioned, you have a sort of a global investment portfolio. How does sort of Southeast Asia and what is exciting about Southeast Asia to you, especially in the fintech space?
Yeah, to answer the first question, I mean, if we look back in, the spring of 2020, we were preparing really for the worst case scenario. I mean, I think Sam remembers, 2000, the nuclear winter of venture capital back then. And really, it really surprised us. Our companies did cut their burn rates. But what surprised us was that the acceleration of the digitization of infrastructure and financial services really took off, probably because people had no choice but to turn to digital and online and figure it out, regardless of age they were focused on, regardless of location around the world. That trend's continued. I mean, people also thought, okay, the COVID tailwinds would subside and you'd see growth rates slow. That hasn't happened at all. And so the fintech and investment environment, especially for those that have demonstrated scale and the ability to get to profitability, is absolutely been tremendous. We don't have a single company in our portfolio that needs cash. We went through a lot of financings last year as companies really demonstrated. We had 1/3 of the portfolio reach profitability during those months. And so I think it's just going to continue. I think people have realized that it's not a fad. There's a lot to be done. There's still a lot to be done. And as the world, we return to some new norm, which is very, very different in the United States versus Asia, versus North Asia, South Asia, and Europe, the needs are going to be different. And so I don't think it's going to be, a uniformed adoption and uniformed change. I think it's just going to be very regionalized of how things play out over the next, couple of years before we really return to what I would say is a new norm when we're all on airplanes and free to go back and forth. So that was the first question. I forgot the second part.
The second question is, the second question really is, what really excites you about Southeast Asia? You have a global portfolio, but why are you so bullish about Southeast Asia?
Southeast Asia is underdeveloped in many areas, right? I mean, the penetration into banking, card issuance, areas around cyber technology hasn't been fully deployed. I think Asia is going to lead the way in CBDC, central bank digital currencies. That's going to change payment infrastructure around the world pretty substantially. I mean, it's probably one of the greatest shifts we'll ever see. And so that's what excites us is there's a lot to be done. There's a lot of great entrepreneurs. You have a massive population. And there's just change that will come forward. And whenever there's change, it makes for very, very interesting venture opportunities.
Awesome. Great. And Sam, coming to you. Yeah.
Yeah, if I might just echo one or two of the points that Melissa raised at the beginning in terms of this impact of COVID and how it's continued. And, what we saw across our brands and businesses last year, one was just that it changed the conversation. It obviously changed consumer behavior. I think that was very apparent. It also changed it we saw in unexpected areas, as in, a real change amongst, seniors as well. So we saw folks that were 45 plus, 55 plus actually having, meaningful increases in their interaction and engagement with us as well, which is not an area that we typically would have focused on, but we saw a real uplift there. I think the second thing was we just saw a massive shift in terms of the discussion with the banks, because it was no longer a debate as to whether to digitize, but it was how quickly we can help them do it and how quickly we can help them shift their businesses. And what we saw across the region as folks went through market shutdowns through the kind of Q1 and Q2 and Q3 of last year was that we'd see that we'd have partners that we'd done deep integrations that enabled digital journeys. And those partners, when there would be a lockdown, we would actually be able to accelerate the partnership and accelerate the growth and really see success. And we'd have other partners whose business would literally go to zero in a night because they were so dependent on in-person interactions in the branches. And when you can go and have those those proof points, it just changes the discussion in such a meaningful way. And so, as Melissa mentioned, it's been interesting for us is yes, that great growth during COVID, but frankly, that has just maintained through this year. And so it's not that either the banks or the consumers have shifted back to a pre-pandemic or a pre-COVID behavior, but everything that we're seeing so far is that it's a continued acceleration, which overall is an exciting environment to be operating in.
No, awesome. So yeah, definitely get the message that tailwinds have really helped. But Sam, just picking up from where you left off, in terms of because of the tailwinds and the new normal and sort of consumer behavior as well changing, demographics have changed, consumer behavior is changing. Did you sort of make, how did you sort of adjust to those changes? Were there like product changes that you made? Were there anything else that you did? How did you sort of, readjust to the new normal to make sure that you're capturing the growth that the tailwinds are actually giving you?
Yeah, it's a great question. So, our business fundamentally, from a consumer standpoint, I'd say it's actually been quite consistent because everything we do from a consumer standpoint is focused around how do we educate people. We do that through a lot of content. We do that through various kind of personalization tools to help people figure out for them what are the right next financial decisions to be taking, what are the right products for them to have. And so I think on the consumer side, it's been a much more natural continuum. I think where we've seen a faster shift has been with the banking partners, where if I go back 24 months ago, it was a lot more work to convince people that having seamless digital end-to-end journeys was something that made a lot of sense. And those discussions have really shifted, and we now have folks that are much more eager to explore what those deep integrations look like, because we're able to help people see and help our banking partners and insurance partners see clearly how when we build those seamless journeys together, so that we can take users who have intent and have made a decision and actually help them get the products that they want. That is such a better outcome, frankly, for all involved parties. And so I think that for us has really been the biggest shift that we've seen, is just that eagerness and that willingness. And then I think that, the changing landscape, and we'll talk later, I think about the regulatory side, I'm sure, and about the kind of changing technical landscape. I think all of those things come together to facilitate the fact that it's still hard work to actually get these things done and get these things integrated and get them into production and live to a point where they're impacting the markets. But we're finding that now, we have many more folks that view this from a partnership mentality to say, how can we go down that journey together? And that for us is an exciting place to be, because it's then solving, more meaningful and interesting problems.
Awesome. No, great. Yeah, there's quite a larger topic of discussion on the banking front that I do have. But before I do come to that point, maybe Melissa, turning to you. So yeah, heard you very well. Tailwinds are there, great opportunities, large market. But at the same time, just from an observation, one would say there are also a lot of fintechs that are coming up. The market potentially at some places or some segments of the market could also become crowded. What sort of your advice, just from an investor perspective, would be for fintechs who are trying to tap into this market in Southeast Asia? For example, we've seen, if I just take, for example, wealth management as one, right? Now, there are many players that are coming here in wealth management. So every sub-segment is breaking out into many, many fintechs. But just sort of your high-level observations on, what is some of the things that the fintech founders should keep in mind while they're building out, and even new opportunities that have come out from the tailwinds?
Yeah. So first, I'd like to clarify, we're mostly B2B investors. We do very little in B2C. And there's a good reason for it. We like to go after, what we consider really hard infrastructure issues in financial services. I think you're right, though. I mean, Sam will tell you, he's been at it, a couple of years now. I've known Sam a long time. I have a lot of admiration for what he's built. But, do you need another wealth management startup? No, right? Do you need another lending platform? No. And I think what happens is everybody just looks at it and said, can I incrementally do it a little bit better? We call those vitamin pills, right? it's all about incremental improvement versus really developing a market from scratch, like Sam has done, right? I mean, they were really the first to go do it. They built it from scratch. I think people underestimate, necessarily the head start that they have in all the learnings. I think a lot of founders just look at, oh, I can do this slightly better. Well, for us, that's not that interesting. What we're looking for is who's going to go solve the next problems, the next 5 years, the next 10 years. And that's what we're looking at, are really hard problems. Like, we haven't even touched upon the fact that all this digitization has led to one thing, an increase in fraud in cyber, right? Ransomware is on the rise. You got issues around API security in financial services. There's a lot of really interesting, hard problems to go solve. And that's kind of where our attention is. I think, another wealth management platform, another lending platform, it's pretty hard to compete with the guys that are there unless you have something so transformational that you can scale beyond, what they've done and all the money they've spent. Now, some of the infrastructures maybe some of the products are a little bit dated. I don't know, but we tend to stay away from overcrowded, overfunded, and markets where we think somebody already has a lead and has done it pretty well. And we just stay away from those markets. We're looking for the next hard problems.
Very interesting. Yeah, I would concur on the cybersecurity one for sure. We've been, as AWS, we've been harping a lot about for our fintechs to make sure that the security posture is, where it should be. So yeah, absolutely. Sam, coming to your point now, you made a very interesting point around, you said the banks and the financial institutions are sort of, let me use the word, warming up, right? Especially with the tailwinds. So how is that really looking at, and where, of course, from your business, obviously you've seen that a direct impact, but also, your guidance to founders. So let's say if they're building SaaS solutions or, anything to do with banks, how should they approach it? Any sort of guidance around that? What really works? What didn't work?
Yeah, great question. And maybe just to touch on something that Melissa mentioned as well. I mean, I can't agree more with her insight that the market is crowded and there's a lot of people competing with slightly different versions of the same thing. And the way that we think about this is that consumers really struggle with information overload. And if you look at the number of apps and services that we all have that fundamentally do the same thing, it's getting pretty crazy, right? And so, I mean, if we look at how many banking apps I have on my phone, and then now in Hong Kong, I have 8 digital banks as well, and I have digital insurers, and I have super apps, and I have digital wallets. And so I have 15 or 20 apps, all of whom are aiming to know me in a very personalized way, all of whom are aiming to help me help me borrow money in a very personalized way. Everyone who will do that in a slightly differentiated manner, but fundamentally, if I need to borrow money because I need funds for whatever reason, at the end of the day, I don't actually really care as a consumer if it was enabled via an open API or blockchain, if it came from a digital bank or a traditional bank or a non-bank lender. Like, these things don't really matter to me. If I get installment loan from BNPL or from a credit card, again, it doesn't really matter, right? But at the same time, if we look then at the confusion that comes from having so many apps and so many services and so many notifications and so many different folks that are trying to get to know us and trying to be helpful with the best of intentions, but that fundamentally, again, from a consumer standpoint, all of that stuff is really confusing when the underlying fundamental needs aren't changing and when the actual solutions being offered oftentimes aren't changing that much either. And so I think for us, just for our business, what that means is a real focus on, how do we simplify all of those things and help people actually make sense of all of those different options to figure out when I need to borrow money for something, how do I actually think about all of those and think about what's right for me? And then, Diggy, I think to your question then in terms of, what does that mean from a founder standpoint? What does that mean from an opportunity standpoint? I think it just comes down to, that slightly different version or a slightly better UX or a slightly better version of any of these things, while interesting and while you can maybe get a little bit of traction, fundamentally is going to end up in a really challenging place. And I think what we see with a lot of businesses, even large, fintechs which are maturing now, is that if fundamentally, if there's not actual differentiation that underpins it, but it's just a focus on how can we raise investor money and use that to offer something which is attractive out of the gates with a lot of bonuses and incentives and welcome offers and these kinds of things to get people to sign up, but then the underlying offer is not that differentiated from a traditional FI. At the end of the day, they still end up forced with the same challenge to say, all right, well, now we either need to focus on generating revenue. And so we're actually going to behave like an old school traditional bank might have, or we need to actually find that underlying differentiation. And so I think that, to me, the takeaway or the advice perhaps that comes out of that is actually starting with that last point, which is what's the actual underlying differentiation? Because, you can figure out how to drive that initial bit of growth and how to drive that initial adoption, but it's the underlying differentiation, which, allows that magical thing that Melissa referred to earlier of actually scaling the business and getting it to profitability. And so I think starting with that focus out of the gates is just really important.
Got it. No, makes a lot of sense. Thanks for that. Melissa, now coming back to the macro environment, and recently there are obviously a lot of opportunities which have opened up with the digital banking licensing that's recently come in for, especially in Philippines and Malaysia and Singapore. I believe in Indonesia also there are, the government is trying to push, banks to work a lot with fintechs as an example. So there seems to be a macro sort of push towards digitization and, with the banking licensing coming up. What sort of opportunities do you think that sort of opens up, and how does that sort of change the landscape, in the financial services space over here?
It's a good long-term question. I think, we saw incredible hype around valuations globally in neobanks. I mean, they were starting to price off of extrapolating account balances, equivalent to JP Morgan or Citibank. And that's just not where the account balances are. They're substantially lower. And what we ran some correlation that when somebody hit 1 million users, their valuation went up by 4x. From the VCs. And so we spent a lot of time looking at neobanks globally. I think, it's different every part in the world. So we get into these categories like buy now, pay later. They're different in every part of the world. So are neobanks. If you take Nubank in Brazil, they've solved a real problem for Brazil, and they've done a terrific job. You take Chime in the US, well, okay, they offer you no overdraft fees. So now everybody's reducing their overdraft fees. How sticky will that be long-term? I don't know. You take Revolut or N26, good luck getting customer service on the weekend. I mean, we pretty much have signed up. Personally, I use TransferWise because I needed a global bank account. But then you go down to Australia and you have 4 really great banks. And so, that have been incredibly profitable. And so some of the neobanks are starting to sort of siphon off customers. When it comes to the neobanks in Hong Kong or, where HSBC has been dominant, it probably gives people more options, especially in a digital format, to be able to transfer money and do other things. Singapore has a really efficient banking system. I mean, with Pay Now, I guess if I was, if I'm on the Grab platform and I could get a bank account and I felt the security was there and the trust was there, yes, I'd probably open a bank account, but I just don't see there's room for every single one of these banks to be successful. I think you'll probably get 1 in each country or region, maybe 2 that'll be successful. But I think what you're going to see is a lot of money pouring in. They'll get the early adopters there. And this has been, by the way, this has been going on for a decade in these neobanks. I mean, so far there hasn't been a buyout, an M&A event that's been over 178 million. If you look at the billions that have flowed in, I mean, at some point shortly, we should see $1 billion exit, given all the billions that are flowing in. I think so. It'll push the traditional banks to do more. But at the end of the day, they got to stand up on security. They got to stand up on cyber attacks. They got to stand up on trust. They've got to grow their account balances to support the valuations that they're getting in the market. And I think our view is we're in a wait and see as to what defines success for these digital banks. At the end of the day, the benefit for consumers and businesses will all benefit from pushing the traditional banks along. who survives 10 years from now, my guess is we'll have a substantial amount of fallout, and there'll be, one or two winners in each country.
That's a very interesting one. So yeah, it's wait and watch is what you're saying. And it's from a consumer perspective, it's always a win-win, right? So you get the traditional banks to go onto the edge, adopt more technology, digitize, and hopefully partner with more fintechs. And then they also have the neobanks, which of course from day one are digital. So hopefully that, there's both from a fintechs and consumer side could be a win-win, but you'll have to see how neobanks really end up.
But there's no secret sauce. What everybody's forgetting about is what enabled this was the commoditization of banking software.
Correct.
Like, 10 years ago, or maybe even 5 years ago, it cost you $80 million to set up a bank because of, how expensive Temenos was, or Jack Henry, right? That's out the window. Now you can have, the banking platform from One Connect is absolutely, world class. Or you take a lot of banking, the BaaS guys that are out there, it's no longer that expensive. So the software has been commoditized. And then you have cloud services, right? All of this stuff has been completely lower cost, commoditized. So ultimately, the interfaces are the only differential. We get back to what Sam said, right? How many banking apps do you need on your phone, right? At the end of the day, you're going to go to one. Why? Well, I don't know, consumer preferences. But as you said, we all benefit from the licenses being issued. We all benefit from them pushing each other along. So the consumer wins, the small business wins, absolutely, because that's been painful in banking. But who survives? It's a wait and see.
Awesome. Sam, any views on neobanks, traditional banks, how are you seeing the market evolve?
Look, I think Melissa said it very well, and I'm in complete agreement. To me, the biggest benefit is what you both touched on, which is how this pushes traditional FIs fundamentally. Because I think just when you change the expectation in a market within consumers as to what good looks like and to what good, what actually being user first looks like, and what actually helping people looks like, and kind of get better and better at that and have more creative minds thinking at that and trying different ideas. I think that just leads to more competition and more innovation. And it pushes the banks forward, the traditional banks forward. And so I think, look, we continue to see, in a market like Hong Kong, where we have a lot of digital banks that are live now, doing some interesting things, but, still early days. And so we're seeing some nice adoption numbers in terms of new users driven by, welcome offers, driven by interest rates, driven by, some initial new features. But I think to me, what's fundamentally more exciting is just how it's pulling the overall industry here in a direction which says, hey, let's really innovate. And as you touched on, let's think about partnering more with fintechs. One of the things that we find in general, and I think it's been a real shift over the last couple of years, and that I think digital banks help with, I think open APIs help with, and kind of just these discussions and these movements, is the fact that it leads our partners in the banks to say, how can you help us how can you help us to compete with these guys who are digital banks or digitally native or other players? Like, how can you help us stay at the leading edge of that curve? And so I think, a big part of our approach is through partnership with FIs, because, there's a lot of really, terrific businesses and terrific leaders in those traditional FIs who are innovating quickly as well. And some of them have a lot of, institutional constraints, and some of them have made a ton of progress with those. But, we see that really as a tremendous opportunity, as close partnerships with banks, close partnerships with insurers. And I think the progress and the shifts in regulation around digital banks and around open APIs and these kinds of things fundamentally just creates an environment where we expect that will continue, and will continue to be a really attractive opportunity.
Great. So I do want to segue into, which you mentioned, Sam, your last point on the shift in, regulations. Anything that you want to elaborate in terms of, especially for Southeast Asia, where do you see it going, and, any guidance for founders, how to kind of, be up to date with the regulations, how to adapt the business models? You think it's progressing well, not progressing well? Just your candid views.
Yeah. Look, I think as with all things Southeast Asia, there's no one answer. Look, our general approach, and I think this is certainly impacted or influenced by the fact that we partner closely with financial institutions. As you know, we take a very regulation forward or regulatory forward approach in terms of viewing close partnerships with regulators is a key enabler. I think if I think about it generally from a fintech and from a startup standpoint, I think being able to engage well in the regulatory landscape can be a real positive if you have the capital, if you have the business model to kind of deal with the uncertainty, to deal with long timelines. But I think it can really be a positive. I think the challenge can be, at least what we've seen, is the challenge is how do you think about timelines? How do you think about certainty as to how things will evolve and will develop? Because these are, by their nature, changes in regulatory models are not certain. And so if you look at, 2 years ago, we're sitting on a lot of panels talking about open APIs and, how those were going to change the world and what those were going to do across Asia. And look, there's good discussions and there's frameworks across, most of the markets across greater Southeast Asia. A couple of years in, have any of them meaningfully moved the needle in terms of, what a consumer's interaction with their banks or with finance in general looks like? Not really, right? Now, if you ask me in a 5-year view, am I excited by it? Absolutely. Is it going to be a good thing for our business? Absolutely. I think it's going to allow us to take our SaaS business, Ecos Connect, and accelerate it in a lot of interesting ways. And so we welcome the progress around these topics. We welcome engaging with the regulators. Fundamentally, we find the challenge is often less around the technical aspects and more around the kind of the commercial aspects, the partnership aspects, the kind of risk management aspects of what these changes and regulations actually imply for our business, for the banks, for how that entire ecosystem is regulated. And so I guess all that to say, in general, we think it's positive. We really, we welcome change. And I think we're fortunate in a lot of the markets in greater Southeast Asia to have really engaged, terrific regulators that are trying to drive innovation and to create the right environment for that. But change happens slowly in general within regulations for good reason. And so I think that's the challenge that we kind of constantly work through with our partners, with our regulators as we try and drive things forward quickly, but doing it in a fully coordinated manner.
Awesome. No, thanks for that. Now, I do want to shift gears to a little bit, really around evolving business models. And Sam, coming to you, you have an interesting company that you're running. You have, a consumer side to it, and then you also have a SaaS, B2B SaaS. So just walk us through a little bit, what the SaaS model is and what are some of the other models that you're seeing. And Melissa, I'm going to come right after this to you.
Yeah, absolutely. So, for us, the launch of our SaaS business, Ecos Connect, was really an extension of our core consumer-facing businesses. And fundamentally, what we realized was that the scale that we've built through our consumer-facing brands and through all of the users and engagement that we have there has allowed us to build really deep strategic partnerships with a lot of financial institutions across the region. And so the way that we thought about and what motivated us to launch Ecos was to say, how can we actually take those integrations, take those partnerships, and yes, consume them into our own first-party properties and into our, the 10 million users that we have there, but how can we actually offer those to the market more broadly to really accelerate the overall financial ecosystem and how financial products are distributed across the markets that we operate in? And so fundamentally, what we seek to do and have made a lot of progress in through our SaaS business is to bring those same integrations and partnerships to a much larger audience of people by opening it up to the number of brands and partners that we work with. And so specifically, what does that mean? Well, we brought this business to market about 9 months ago. And what we now do is, along with working with our own portfolio of consumer-facing brands, we now work with more than 200 other digital brands as well, connecting those digital brands to the financial institutions that we partner with across the region. And that's a good start. And we've been really excited by the uptick that we've had in just a couple of quarters. But fundamentally, we think the opportunity for this is just massive. And for us, what drives this as we think about kind of underlying shifts that are happening in the market, underlying shifts that are happening amongst consumers, one of the ones that we think about a lot is really the evolution and the growth of the creator economy. And this is something that's been happening for a long time. It's something which really accelerated during the pandemic as we had more and more people who, started to, either had challenging professional environments, but started to really focus on content creation, actually building out communities, building out dedicated user bases. And I think historically around the world, you've seen a lot of this happening in fashion and a lot of this happening in beauty. What's interesting is that we now see the same thing happening in personal finance and in, helping people actually figure out recommendations for, what are good decisions to make in terms of what products to have, what investments to make. And so one of the things that we seek to do through our SaaS business is to say, well, look, we'll keep investing into our own consumer-facing brands because we see massive opportunity there. But at the same time, we really want to empower this creator economy and empower all of these people who are building up these niche dedicated audiences and groups of users and help them connect those users to financial institutions and bring those same benefits in terms of educating people, empowering people, helping them make the right financial decisions, helping them realize those decisions, and just do that at a massively larger scale. And so that's fundamentally what we're doing through Ecos. We've seen a lot of traction in the first 9 months. We've been really excited, I think, just from a technical standpoint in terms of, the ability to take a lot of the work that we've done and then through partners such as AWS, to really accelerate that and bring it to market in a very different way. And something that we are very, very bullish about the opportunity on moving forward.
Awesome. No, thanks for that, Sam. Melissa, coming to you just on the same topic. Sam alluded, you said that, you invest in B2B. So what sort of exciting models are you seeing in B2B fintech, recently? And what are you really excited about as an investor?
So just comment on the business model a bit. We've actually seen a little bit of a shift away from pure SaaS, sort of back now more a blended approach, right? There's certain businesses that just don't lend themselves to pure SaaS, where you have to have a platform fee. And it just can't, and it's got to have a longer term contract associated versus, just the monthly and hey, you can cancel anytime. So I just on that, we've seen a little bit of shift, especially for hardcore infrastructure. So what excites us now, the intersection of insurance and payments, we think that's pretty exciting. Anti-fraud, cyber, central bank digital currencies, in insurance, particularly, we think cyber risk insurance, there's no way to underwrite a blanket cyber risk. We're looking at kind of vertical markets within the cyber risk insurance area. So those are the areas that we're currently focused on. We think API security is a big deal as well. Like you have so many endpoints out there, figuring out your risk, that's a pretty important area to us. So and then I think finally, we don't think we're done with regulation. So especially around data privacy, data storage, data processing. And I think we're going to be in a increasing regulatory environment globally. I think COVID-19 is a license for governments to now start to implement more and more regulation around financial services. So those are the areas that we're currently focused on. Yeah. And so, I think part of it is working with the portfolio, helping them mature, but then also saying, okay, we question ourselves every single year. What's next? What do we need to be focused on for the next 5 years? And these are the areas that really sort of rise to the top of the list. We've done BNPL. I'll get back to that. Like we've done BNPL since 2014. It's not new, and, it's a good example of a segment where people don't understand you need huge lines of capital to scale. And getting a credit line for $10 million is never going to scale a business, right? And I think that is one of the challenges in Southeast Asia that's got to get solved. You have got to have working capital and credit lines available, whether it's a lending business, whether it's buy now, pay later, which is really just a virtual credit card, right? They're basically creditizing debit cards. Like there's a lot of And I think when you look at the BNPL companies around the world, they're starting to migrate now to stored value and actually becoming more like a neobank. And they start, like, that's one thing we've seen in fintech. People start somewhere and then they migrate somewhere else. But let's also look at what's been the most successful companies so far. They've been companies that have taken things that are messy and made them easy. Plaid, Credit Karma, TransferWise, Stripe.
Yeah.
So it's what we continue to look for as well.
Got it. Melissa, that's interesting. But if I look at Southeast Asia, there's there have been some opportunities, obviously. Of course, you maybe as an investment thesis focus on the B2B enterprise, sphere for that matter. But let's say if you look at markets like Indonesia, etc., there's also this opening up of opportunities where, credit lending to small merchants or, the unbanked, etc. Do you see those as interesting opportunities that could come up for fintechs, and how are you sort of seeing that?
It is interesting. I mean, a lot of the companies have already scaled. I mean, we're in Akulaku. They'll surpass 500 million in revenue this year. I think the big issue is you got to get lending capital. And so that's an inhibit. Like, there's only, like, you have Credivo, you have Akulaku, and then you got, the platforms of Gojek, right? And then you've got Grab. These guys have massive amounts of capital and access to capital. So for startups to play in this game, they got to figure that out. And it's not like you're in Europe or the US or even Japan or China, where there's lots of lending capital that you could tap. You got to find a way to solve that bottleneck to really scale a business big in the region. And as Sam said earlier on, it's every country's different. So if you're going to scale, in Indonesia as an example, you got to get lending capital on rupiah. If you're subject to US dollar exposure, that could be pretty hard hit. Yeah. And so this is one of the challenges for when we look at those types of business models in the region of saying, beyond venture capital and raising venture money, how are you going to build a sustainable business over the long term? You got to have that balance sheet.
Yeah, maybe some form of blended capital coming and some sort of innovation over there to actually make sure that they can do it.
Yeah.
I also remember my social impact investing days. We used to talk about blended capital because, you couldn't start off with venture from day one, right? You needed the grants and the DFIs to come in to, prove the market first, and then you could take venture and then go to debt. So, you need some sort of a interesting, maybe blended capital, some sort of mechanism. That could be an opportunity as well.
Absolutely.
Interesting. No, I think we are just about, we've got about a few more minutes before we close, but I do want to kind of give it and sort of an open this thing. So I'll go with you, Sam. Sam, phenomenal journey. I think we talked a lot about very interesting trends. You're doing both consumer and SaaS, and you've seen sort of the market really evolve for you. You talked about tailwinds, which have happened. But just in terms of if I were to put you in a founder's shoe today, who's aspiring to build a large fintech business, and I know this is a very, it's not a very specific question. What are the top 3 things that you would tell that founder, and which is predominantly our audience today? So what are your 3 real, advice that you would give to founders in this environment today?
Look, this may sound a bit generic, but I would tend to say, find a real problem that needs solving, and then focus on it, and then make sure you have a good team around you doing it that complements you, because there are so many different skills and competencies, both professionally or technically and personally, that are needed to build something. And so that, like I said, it's a bit generic, but I think, if I think on, our journey building Hyphen, and then just a lot of the themes that we've discussed, in this session together, right? To me, those are you need a real problem, and you need to focus on it and not get distracted. And that doesn't mean not to evolve, as Melissa said earlier, right? I think lots of businesses evolve, but that's different from trying to do 10 things at once. And then, the team to do it with, because you can't do these things by yourself.
Yeah,
So
I'm just going to nuance your finding the real problem bit because that's, I think, the crux of it, frankly. So, Sam, we were talking about business models and tailwinds, etc. And there seems, obviously, given the what are sort of the shifts in consumer behavior that you've seen, which has also resulted in different opportunities for fintech founders.
Yeah, thanks, Diggy. It's a great question. I think there's a lot of shifts. One of the ones that we really see from the users, and we see from feedback and engagement from our Seedly community and from users across our brands, is what I would describe as an evolution of thinking from focusing primarily about cost savings in terms of how to get lower interest rates, lower fees, et cetera, towards a real focus on revenue generation. Right, as in how to build wealth and how to build wealth not just amongst an older, more mature audience, but really as folks are getting started professionally as well. And I think that's not surprising if we think about the macro environment where most asset classes have been rising aggressively over the last 12 months. But so what we see is that from our user side, there's a lot of questions, there's a lot of engagement. Which is both generally exciting and I think opens up a lot of opportunities. I think it also highlights a lot of questions that we think about in terms of educating people, empowering people to make good decisions, because increasingly we see people who are new to the personal finance world who are starting right away with investments into individual personal stocks, for instance, right? And there's clearly risks that come with that, wading into that market space. From an individual standpoint. I think from a partner standpoint, what we see is, I think around the world, we see lots of businesses in terms of trading apps, social trading, who are at meaningful scale. We see that globally. We see that here in Asia. We're partnering closely with many of them. And so for us, this is an area where we've seen a real shift, where we see a real opportunity to really try and deliver on our mission of educating our consumers around what's a really important opportunity, a really important avenue or bucket that people are really focusing on now in terms of how to drive those savings and actually generate wealth from that through investment products, how to help our partners get better at this. So we've seen a ton of traction on this in the last 12 months. It's something that we're focused on a lot going forward, because we see a real opportunity to help both sides of our partners, but making sure that we do that in a way that really puts the focus of the users, of our users in our community at the heart of that, in terms of how do we empower people to make important decisions in this space.
Frankly. Yeah. No, thanks, Sam. Melissa, closing comments, anything, guidance for, our founder audience, fintech founder audience here today?
I just want to add to what Sam said. Is exactly right. And I would also say, listen to the market feedback. And I think a lot of times, it's a journey how you innovate and iterate your product. And you need to listen to market feedback. You need to have a process internally to take that market feedback and figure out what to prioritize, not prioritize, because you don't want to be a weather vane every day, go out and change your product based on what people said. But it's those that can triangulate that market feedback and do it successfully then with a team, as Sam said, surrounding you, that will be very successful. And that is something we absolutely look for.
No, awesome. No, great. Thank you, Melissa and Sam. Thank you so much for joining us this morning. Really appreciate your very candid, conversation that we had. I think there was a bunch of very interesting insights that hopefully our fintech founders have picked up. But on behalf of AWS and Tech in Asia, a big thank you for joining us this morning. Thanks a lot.
Our pleasure. Thanks, Diggy. Thanks, Melissa.
Thank you. Take care.
Bye-bye.
To the audience, thanks again for joining us this morning. I hope, just from that first session, you've already picked up some good tips. Next, we'll be having another panel discussion. Samath Bansal, APAC Business Development Lead at Wise, and Andrea Barron-Kelly, founder and CEO of Aspire, will be talking about game-changing fintech partnerships. Lillian So, the fintech lead at AWS, will be moderating the session. Stick around.